tensions between Japan and China have been grabbing the headlines for the last couple of years. Among the biggest victims are the economies of Asia's two superpowers, as trade and investment flows between them have been seeing some serious disruptions. Trade between Japan and China is worth around $350 billion a year. China is Japan's biggest export market. About a fifth of all Japanese exports end up there. But now those numbers are heading south. According to JETRO, two-way trade shrank 11% in the first half of 2013. It was the first drop in 4 years. As for Japanese investment in China, that fell by about a third. A big reason is the ongoing row between the world's number 2 and number 3 economies. The tension tightened in 2011 when Japan bought the Senkakus, a tiny group of uninhabited islands claimed by both countries. The news touched off angry and even violent protests in China. The most recent public opinion polls paint a depressing picture. More than 90% of both Japanese and Chinese have a negative impression toward each other's country, according to a set of polls this past summer by China Daily and a Japanese MPO. That ill will is spilling over, becoming a source of frustration among business people on both sides.
I think both China and Japan, I think they should work together, just like a neighbor, right? I think compared with the United States, I think the most important thing in China and Japan, they should develop very mutually beneficial relationship between China and Japan.
Then there's travel. The number of Japanese business people and tourists going to China in early 2013 was down 26%. A similar decline was recorded for the number of Chinese nationals coming here. Make no mistake, tourism is big business. By some measures, it's the largest service industry in the world. The average Chinese tourist in Japan spends over 200,000 yen. Japan's automakers are also suffering. Bloomberg News reports that Japanese car manufacturers in China have lost about a fifth of their market share over the past year. The most successful brand in China is not Toyota, but GM, which sells nearly 3 times as many vehicles there as its Japanese competitor. Some analysts believe that the economic relationship between Japan and China is so huge that quarreling over these undeveloped dots in the sea simply isn't worth it.
Economically, the Senkakus are worth very little. They're important to Japan in the sense that if China were to take them by force, it would be a sign that the United States is not willing to defend Japan. It would put Japan's security in jeopardy. It could be seen in Japan as the beginning of a period of Chinese hegemony. So in that sense, they're important, but economically, they have essentially no value whatsoever. In terms of the fisheries, when you're talking about an economy Japan's size, a few fish is essentially insignificant. I mean, maybe a value to a few hundred or even 1,000 fishermen. Or the oil and gas reserves, we don't know exactly how much there is, but unless you were talking about gigantic oil fields, again, given how large the Japanese economy is, as a percentage of GDP, it's not going to be of great importance.
So the question over who controls a tiny speck of islands is having a colossal economic effect. Meanwhile, some observers are calling on the politicians and diplomats on both sides to take a step back and to take a sober assessment of their nation's priorities. Thank you for watching Business in Japan TV.